Mm-hmm.
So there has been a change in the personal income tax structure, the rates and their rates and boundaries. Now, first off, as we can see here, from 800,000 and below annually are not taxed at all. But then it's not simply that those that earn above that are taxed 15% or 18% or 21%. The amount within the range, if you earn, let's say you earn 5 million, remove 800,000 from that 5 million, that would be 4.2 million. So the first quota of that money within the range of the 800K and 3 million will be taxed 15%. Then, so from there, you remove the 800,000 and you remove 2.2 million. That's 3 million. 800,000 out of it is not taxed. 2.2 million of it is taxed 15%. Now, the remaining 2 million will now be taxed 18% because it has now passed the boundary into the 3 million to 12 million boundary, and that will be taxed 18%. This taxation structure is meant to help mostly in a lot of ways the middle class and the lower class, which is the majority of Nigerians. The new tax structure that has been brought into function has chosen the method of a more progressive tax system, and it's going to weigh more heavily on the high earning companies and individuals. So their new tax structure is supposed to be a help for people. Some people are misinformed about the current tax structure. So they are under the impression that the government is trying to tax people in general more, but that's just not the case. And for the most part, that's just misinformation. Each situation is unique to each person, but for the majority, they are going to be receiving a less tax. Mm. Now, in the past, there have been a variety of numerous taxes that are overlapping with each other, and they became unnecessary because certain tasks are too closely associated with others, and it makes the process, the bureaucracy of it, too strenuous, and even the administrative costs of running several tax systems became too much. So they were able to merge several tax instruments and bring them into one using technology and electronic media. It's not yet fully implemented. Like I said, it will all be fully implemented January 2026. And even when it gets to January 2026, not everything will be fully, you know, put in place, but then they will start putting majority of things in place. And even from the point they made the acts or they signed it in June 2025, they've already started putting things in place for next year when the act comes. So, as I said before, it reduces the burden on the poor, and also it's diversifying revenue, putting more on VAT because VAT is more generic. It spreads around on different goods and services, commodities in general, than just putting pressure on oil. Oil has a lot more tax exemptions because it's a what's the word? It's on the chain of production, it's at the very beginning. So it's less influenced by things like VAT, because VAT, they're putting more pressure on VAT, and VAT is aimed towards the final consumer. And the oil industry is more so a producer's industry. So there's less tax there to help companies grow. Then, as I said before, they're putting more effort into IT, digital electronic in tax enforcement. So they don't have people on the streets, police officers and stuff like that, or them coming to your house to do things they could easily have done online. So taxable income sources, platform revenues. So now I'm talking about the creatives, In the past, creatives were not really taxed, YouTubers, TikTokers, um, people that make their money, even artists, people that make their money in more less solid ways, they are more abstract, oh, I make music, it was a bit more difficult to gauge the profits and losses and costs from industries like that. And they were more broad. But now in the new tax act, all those industries are going to be taxed fully. And even if you're operating overseas and you are getting profits from abroad, you're still going to be taxed. Deductible expenses, examples like business equipment, software subscriptions, all these things, we're supposed to keep receipts on them so that as we are tracking our expenses, our costs, expenditures, the government can also track it. And if we're ever going to be checked on what we have spent, the profits we have made, we'll have evidence to be like, no, this is what I made, this is how much it costs. So we're supposed to now keep these things. But now the government is also given the right to be able to view our accounts, our banks, and in extreme ends, they can actually withdraw money if you have broken certain laws and they give you a chance to prove that this information is not true. After multiple chances and you still haven't shown any evidence that you are willing to go with the law, then they can simply take it from either your company or your personal assets. Now, so all these things are now very important. And now companies themselves, they have to get staffs that are trained to know all these policies, understand. And after the staff are now trained, then the company executives are now also to be trained so that there's full understanding in the company as to what is going on in the tax industry and they can comply with all the rules and regulations without breaking any. Mm. So foreign taxpayers, or rather foreigners that are working within the country, especially within the digital space, the technology space, they are going to be exempt from tax to encourage the technology field, especially, to broaden our horizons, especially since the West they're more fervent when it comes to technology, so they're not going to be taxed. If you're a remote worker and you're working, if you're a remote worker and you're working in Nigeria and the country you're working in is not taxing you, then you are expected to pay tax within Nigeria. Although, if you are being taxed by that company or rather by that country, and the company is taking it out of your salary, then you are expected to have evidence that this is the case so that you won't be taxed in Nigeria. Hmm. Also, tax reliefs for those staying in homes with the reason to believe that they can't pay, although it stops at 20% and the maximum, and if the 20% it goes above 500,000, then it caps there, it doesn't go any above, but there's relief for house owners. Taxed on world resident taxpayers, taxed on worldwide income obligation using double taxation use. Okay, so I've gone through this. So to get the relief I spoke of previously or earlier, you need evidence of your rent payments. You need documentation. If you don't have that, then it won't be possible. You need official documentation, not through just messages or something very casual. You need official documentation showing proof that this is the amount I spend monthly or annually on rent, so that if they want to give you rent relief, they will know that this is the accurate information that they're using. Mhm. So many people are wondering, are you going to pay tax? Are you going to pay tax for shares? And the answer to that is no, unless under some certain specific, circumstances. Now, if the proceeds you get, if you proceeds or the amount you sell in shares is above 150 million, then it is going to be taxed. If it is, if the profit you get from it, from selling your shares is above 10 million, then it is going to be taxed. But it's not the whole amount that's going to be taxed. The amount beyond the point of 10 million is what's going to be taxed. Assuming you withdraw, assuming you bought shares for 10 million, then when you got it back, or you bought shares for 10 million, then when you sold it for 25 million. Then the first 10 million out of the profits you made, which was 15 million, is yours to keep. But the remaining 5 million is going to be taxed and given to the government, not the entire thing, but the tax rate of the interest.
Oh, repeat
Then,
that. I didn't get that.
like, assuming you, okay, let me go 20, you buy shares 10 million and you sell it 25 million. The
Mhm.
Now your profit is 15 million. The
Mm,
first 10 million that you got as profits from the 15 million is not going to be taxed.
okay.
Then the remaining 5 million, from that 5 million will be taxed. You will not give the whole thing to government, but the 5
Okay.
million, the rate, it will be taxed from the 5 million. But you get to keep the first 10 million. And that's how it goes on and on. As long as if it goes above 10 million, it has to be what's cut off from there has to be taxed. Then companies disposals are taxed at a rate of 30%. Now, if a company should buy a foreign currency and let's say they make profits from, let's just say when they make profits from buying that currency. Let's say initially they had like $1,200, they changed it to naira, and let's say they got like 1.2 million or 1.5. And then when they gave it back or they sold the naira for dollars, they got $1,600. Then the profits they made from that is going to be taxed at 30% because there was a $400 profit, and that's considered companies' disposals, among other things. And okay, we've gone over this. Now, of recent, NFTs, digital currency, crypto have become very popular. And for the past years, they are very popularly known for how untraceable at times they can be. But over time, they became a lot more open sourced, which made it more traceable, because they wanted people to trust it. Because initially, when crypto came out, most
That
people
this
thought,
thing just now is coming from my laptop.
what sound? I'm not hearing any sound.
Okay, go on. No, I saw an emoji and the same me. I don't know. And my hand is not.
So that's
Just
so now, okay.
somewhere 1 minute.
All right, that's fine.
Yeah. Good morning. Good morning, man. Okay. Hmm. Hmm. When are you loading? When are you loading it? Today is Wednesday. Okay, all right. No, I'm not in a hurry. Okay, I'm in a Zoom meeting now. I'll call you back which option I will choose. Thank you very much. All right. Yeah. Sorry, Samuel, continue. Hello? Samuel.
Okay, can you hear me now?
Okay.
Okay, so I wanted to try an earpiece, but it's not working.
Mm.
So popularized of recent crypto from Bitcoin, Ethereum, different basically cryptocurrencies in general have become a popular asset. And there's also NFTs. So in the past, or in the past acts, they were not taxable. But now, whatever profit you make from trading NFTs, crypto, are now going to be taxed in the new um, 2025 Act, which will be implemented in 2026. Now, they're going to be there's still going to be the personal income tax rates that we viewed in the second slide. They are going to be taxed at that rate. So the profits you make, because crypto oftentimes is not really a company affair, it's a personal thing. So it's still going to be the profits you make are going to be taxed on the basis of personal income tax. If you make below 800,000 naira, then you don't have to pay tax because that's below minimum wage. But anything above that, you're going to use the same personal income tax rates to pay your taxes. And through invoicing and fiscalization, which I will explain in the later slides, but fiscalization, but it's basically them using electronic methods to monitor our accounts and the transactions that go through it so that they can, to some degree, tell when there are profits made. You know, the reality of it is they're not going to be able to fully tell what exactly is going on in our accounts. That's why they expect us to be able to explain our accounts to them and be able to defend it with evidence and records. There are going to be certain, in the lower income ranges, like middle class, there are going to be certain areas they overlook in a sense, but not necessarily overlook, because the very act of administrating those areas costs more than regaining the lost tax. So to avoid wasting citizens' money, wasting people's money that they've spent paying taxes, enforcing small amounts of taxes, they in a sense turn a blind eye to it, but not entirely, but they just can't afford to chase certain amounts. Like, oh, if your tax deviation is like 20K, the government is more likely to just slide it across. So yeah, and these are from problems of documentation, keeping records and things like that. They can cause a problem. So in the new act, bonds are going to be a very good field to invest because bonds are completely exempt from tax entirely. I mean, you're basically buying them from the government, so it makes entirely complete sense why bonds would not be taxed. So bonds are completely not taxable. Mm. So even though you're buying bonds, you still have to keep records so that your profits at the end of the year or your revenue at the end of the year will balance and they'll be able to understand that, okay, this amount is not taxable, this amount is from bonds. So yeah, that's how bonds are going to be treated in the coming year. So yes, dividends interest royalties gotten from outside countries, how are they going to be treated? Well, Nigeria still wants to encourage foreign, foreign transactions and things like that, from dividends, foreign ownership of companies, multinational companies. It just wants to encourage economic growth from means like that. So things such as dividends, interest, royalties that you get externally, they are not going to be taxed because simply from the money entering your account and the foreign exchange in that region, naturally speaking, it benefits the economy. But you still have to document all those things to make sure that it checks out at the end. Mm. So yes, pensions and severance. So pensions, usually we know what pensions are. They are for when you wish to retire and you worked at a company. And so yes, pensions are not going to be taxed. You know, they are completely exempt from tax. Then severance. Let's say you are being removed from a company for whatever reason, and maybe you are a high-ranking official or CEO or even anything, and they want to pay you a severance package. In that case, it's not going to be taxed. But then if it passes 50 million, then from the 50 million points upwards will be taxed. So that's how severance is going to be. It's not pensions is no matter what, pensions are not taxed. But severance is different from pension. It's not a retirement fund. It's simply you've left the company with the potential to enter another one. So that can still be taxed.
You say pension contributions remain tax deductible. I don't, and you say no tax.
Contributions remain tax deductible. No, no, this is like when you're receiving the pensions. How would it's like the contribution remain that we have felt for at least 5 years. For at least pensions held for at least America's capture contributions remain tax deductible. Contributions remain tax deductible.
Tax deductible, which means they are going to take tax. Employees track
I,
relatively.
I think it's referencing also when the pension is received at the end. I might need to look into that
You need to
because
look
I was
into that
ref
again. Mm.
yes, I need to look into that. If you're
Okay, can go to the next slide then. You need to look
okay.
into that.
Um, um, okay. For military salaries, they've decided that military salaries will no longer be taxed. They will be tax exempt. I mean, soldiers are already, in a sense, every day they are putting their lives at risk for the people and they are government workers. So decided that military salaries will no longer be taxed. Mm. Regiment, pension, so all these are basically things that even as military, certain things will still need to be checked, records will still need to be kept. Yeah, to verify these things, even as a military person. But in the end, essentially speaking, military are not taxed. Hmm. So from once 20 from 2026, VAT is going to go up. Now the interesting thing is now VAT is no longer going to be treated as, and this is referring to input VAT. which is VAT that you pay when buying commodities that you intend to use to create other commodities. Like, let's say
I buy
let's say
cement to
you
build a house.
yes, you buy cement to build a house. I don't know why toothpaste came to my head, but yeah, you buy cement to build a house, and while buying the cement, you pay VAT.
Mm.
Usually, in the past, that VAT is going to be added to your expenses, and then all in all, when the expenses will be deducted from your total um, profits at the end of the year, then the government is going to tax that total amount, and that's where your corporate tax comes in. And they felt that procedure was inefficient, and it ends up kind of taking taking unwarranted tax from the people. So now instead of adding input tax, or rather input VAT to your expenses, they're going to put it in a separate place with called VAT for VAT filings. Basically, you keep a record of your VAT, your input VAT, which is how much VAT you spent to get, the things for production and the costs, and your output VAT, which is the VAT you added on the now consumable products, like the house you want to sell now that you bought the cement you used to build the house. And if your output VAT is more than your input VAT, then whatever amount is left, you have to send it to the government. That is how you pay it. That's how you pay VAT now. That's how you pay. Yes, that's how you pay VAT now. You no longer add the input VAT to the expenses. You just send it back to the government. But if your input VAT is more than your output, then the government is going to refund you for that amount, because it no longer wants VAT to be included in the total amount of your company. And now, what's the effect of this? Because of this, at the end of the trade year, your profit is now going to appear higher. And if the company's profit appears higher, then you'll be like, oh, that means they're going to tax us more. But if you actually calculate what you would have, your total tax, what you would have lost if you added your input VAT to expenses, then you realize that you pay more taxes by doing that than the current method. But misinformation of late, because of simply you pay more corporate tax in total, or not the corporate tax in total is now more. People are now saying, oh, they are charging companies more, oh, they are using VAT to kill companies. But in reality, actually, you pay less tax, because now VAT is no longer included in the overall balance sheet. And the good thing about that is now companies companies' total income now their income statement now looks better to, stakeholders, shareholders, people that want to invest in the company. And that basically helps economic growth than before, when VAT could basically tweak how a company looks. I could give an example, like you buy cement 10 million.
Mm.
You buy 10 million, you pay VAT 7.5. So therefore 750,000. Then let's say you build a house, you sell the house 30 million. Then you add the VAT on that house. That's about 2.25 million. That will be the VAT.
Mm.
So if sorry, now the math is mixing in my head. I should
That's
use
it
big
again. Let
figures.
me, I'm trying to even complete.
Yeah, I think I use big figures. So let me just write the numbers. So 10 million. So basically, if now the 750,000 from the 10 million is your input VAT, then the 2.25 million gotten from selling the house at 30 million
It's output VAT.
is your output VAT.
Mm,
So you subtract the two
mm,
and you get 1.5 million.
mm. So
Now
that's what
this
you
is,
remit to government.
yes, that's the amount you give back to government,
Mm,
1.5 million. So that 750,000 that would have been there before in your expenses is now removed, first and foremost. Is removed because you've already dealt with VAT separately.
mm.
Now, what is now your profit from this 10 million to, sure, that's actually a string of math. What's it called? So 10 million, 10, 40 million. Probably should have put an example. So your profits in total from all this, with while removing VAT, that's
You come from here, calculate your profit now. Don't get what time.
so
It's only okay. Let me understand what you're trying to calculate.
yeah, it's
Input
is
VAT is 750,000. Output VAT is 2.25 million. Abi?
yes,
Profit
2.2 million.
profit is 1.5. I say profit. Net VAT is 1.5 million you remit to government.
You remember the government. But what I'm trying to calculate is now, how's it called? What I'm calculating right now is the profit that the company makes, like from buying cement, selling at 30 million, and then you now remove the VAT that you spent. When you do that, when you do that, if you put the math together at the end
Mm,
and you do the math with the previous method they used to use, which is keeping the VAT inside expenses, and then your corporate tax is now taxed. You learn that you actually gain more most times. Although there's an exception. There's one party that potentially doesn't gain more, and those are the companies that earn above 50 million. Oh no, the companies, the ones that pay the highest tax rate, corporate tax rates, are those
okay.
that 50 million. Because because currently they have the burden on them now. Because like I said, the government is now trying to tax more on the rich than the poor. The burden on
Mm,
them now is a lot more than before. So it doesn't, okay, now since we're speaking in very high numbers, in a sense, it affects them a lot, but percentage wise, it doesn't really change their figures from the past that much.
mm,
But let me go to next. So that's how VAT is now helping Nigeria's economy now, and how VAT has now changed from how it was treated in the past in the income statement. So VAT inputs recovery. So yeah, I discussed how you're going to remit, either you're going to remit or the government is going to remit to you. So you have to show evidence basically. You have to record your transactions, profits, losses, and then you send it to the government, and they'll decide whether they're going to remit. Another case where you make a loss, and even if you're not a big company, you still make a loss from this new structure is this new tax structure is if you don't follow this process. Because if you don't, if you if your input tax is higher than your out, if your input VAT is higher than your output VAT, and you don't get your remittance from government, then you'll be at a loss, and the past structure will be more effective. So that's another special case. But that's most people. I don't think they are less likely to do that because I mean it's at a cost. It's at a high cost for their company. I think people will be incentivized to get their remittance. So I don't know if we've heard, but for certain industries like agriculture, there's a tax holiday basically. They get 5 years. They don't have to once you when from the moment you start an agricultural company for 5 years, you don't have to pay anything. But the thing is, before in the past, they used a basically a pioneer status tax holiday. And the problem with that is they did it because they wanted development, they wanted economic increase in those areas. But monitoring that is difficult, and most people were more like a daisical about it. They just open the companies. Sometimes they use it as a front to just, you know, as a loophole to avoid taxes. People use it for various things. And so basically, the government created a different way of doing tax holidays, and that's the economic development tax incentive. So here, they're going to be more carefully monitoring companies that are giving tax holidays. They want to know that you developed, like you actually developed the company, you brought about employment in the community, all the things that basically encourage government to give tax holidays. Because if you're giving tax holidays and you're not seeing any of the benefits, then there's no point in it. So now they've created a system to encourage companies to grow, to actually basically yield the whole point, the benefits of the tax holidays. And that's the economic development tax incentive. So basically, credit used to offset future tax bills, credit offsets, basically rewards qualifying. Now, in the pioneer status, they are provided 3 to 5 years. But actually, in the economic development tax incentive, they are provided the 5 years that are agreed, and they can extend it to 10 years depending on how much they develop. If they haven't shown enough development and they are not basically they show that they're not using the tax holiday to the maximum, then they are capped at 5 years. And for some, they are even capped before much far before they like you can start an agricultural company today, and if you're not maximizing it and the government feels like you're using this for maybe just companies as a shell company to avoid tax for maybe your other companies, or it feels like you're not developing or basically different reasons, they can actually just completely stop your tax holidays and you start paying tax from like year one. So that's the economic development tax incentive as opposed to the prior pioneer status. So before, I just want to say that okay, anywhere you see NRS, mm, that's National Revenue Service, is now the new name for FIRS, which is sorry, Nigeria Revenue Service is the new name for FIRS, which is Federal Inland Revenue Service. So from next year, the FIRS has changed its name officially. So how are they enforcing all these new laws? So there's going to be a lot more monitoring. I think we know a lot about whistleblowers. There's going to be stricter penalties for faltering on any of the new tax laws. Then from fines to a variety of things. Then operational, operational education, prioritize time, tuition and filing. So yeah,
Stricter
now
penalty, failure to register what? I don't get what are they going to be penalizing for them?
no, if you don't like have sufficient documentation to basically buttress, let's assume you are buttress a claim or claims that you're making about setting your income or revenue, then you might end up having to pay a fine. And the thing is, it just starts at 50,000. The thing is, a lot of these are summarized information. I went to the authentic tax act and it was 200 and something pages. So in a lot of these areas, I had to summarize it in the slides so that it would
Hmm.
be able to fit. So yeah, you can pay that 50,000 depending on the kind of the size of your company. You can pay a lot.
I think if you fail to register as a taxable person,
Yes. Okay. 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 Register your person as an
if
individual.
you're
As
yes, as an individual, you have started business. Well, I don't know. I will see what you have to share. I've not read it. When you get to tax ID, if it's in your presentation. So if you are not, so they want to do it. Okay, they want to drag in more people. There are a lot of people who are doing business, Okonko and Co, Big Radio and Sons. There is
hmm,
no evidence. So if you are not registered to pay tax, before you, so nobody must rush to go and be, you are not, you must, I don't know, you must have a VAT ID. Let me see the
yeah, they
presentation
are
today. Mm.
um
I say
okay,
VAT ID, tax ID. Mm.
okay, tax ID. Hmm. So yes, this that's I was actually going to be honest, when I got into tax ID, I found this national single window. So this they want to make it fully like not let's say to some degree, to a high degree, automated and electronic process for taxation. And most things are going to be online and digital, and basically we understand the using technology basically to monitor tax and everything. And that's where you're going to need a tax ID and the rest. But basically, national single window is the term. And it's not Nigeria is not the first to use it. Actually, other countries use it. And basically now they are pulling different variety of tax that make the bureaucratic side of it tedious and the administrative side of it just costly. And they're putting it all under one window, which is the national single window, and they want to now digitize the entire taxation process for all companies in general. So transactional records feeds, NRS for automated income tax, business filings, declaring income. So yeah, basically these are all the areas. National ID data, it verified tax identity, central system. So basically these are all, or at least some of the systems that are going to be used when it is finally implemented. It's not going to, once January 1st hits, all this is not going to be implemented like at once. Like a system might be released and there's possibly I'll more say a website than an app what might combine the two. And basically they walk up from there. So that's the national single window. Sorry, let me just got this. So penalties and whistleblower provisions, what to expect. Stricter fines for failure to file, as was discussed previously. Whistleblowers, you know, they're going to monitor. There are just going to be a lot of things that are going to make loopholes tighter, and tax evasion in general a lot more difficult in the coming year. So yeah, strengths, weaknesses, opportunities. threats. Basically, the overview of the new coming tax act. And I guess to give us a feel of how we should feel about it, we shouldn't necessarily take it as a thing of fear. So it's genuinely, even on a personal ground, I actually went through it and it seems to be very well thought out. And there were a lot of acts that were being used in tax that were active since 1967, and they were just really redundant, and we've been going by them for the past how many years, and they had so many like sub files, sub areas that were just so repetitive, overlapping. And now basically this new tax act has scrapped a lot of that and made things a lot more understandable, simpler, and more observable, basically, so they can actually assess to the extent the effectiveness of the taxation structure. So it's going to help the lower income people. It's mainly coming for the those of higher income status. Although a lot of people are saying because of that, because of the progressive taxation, that it's discouraging economic development. And I believe in a country like Nigeria, I wouldn't fully agree with that. And there are a lot of factors to come into to consider, especially since now they are putting their sights more on multinational corporations, companies that have like let's say KFC that's in Nigeria, on basically taxing them, and not exempting them even if they are international companies. So yeah, in some areas it might discourage, you know, foreign people from trade, and that's actually just the honest truth. But not in all totality, especially since a lot of them have already dig their roots in Nigeria very deep. So will I say the new laws are enough to push very well-founded multinational companies that are in Nigeria away? I don't believe so. No. I don't think Apple or Samsung offices are going to, I don't, yeah, are going to just, or any basically, they're going to just start pushing away, and even less founded ones. The currently put in structures, I don't believe they're going to push them away. So yeah, although poor implementation of all these laws could cause a problem, as our country is very famous for not following through, but we'll have faith that that's not the case, and 2026 will be better for Nigeria. So yeah, that is um, that. Hmm. So yeah, but one thing is for sure, the VAT has been raised, but like the reason they did this is because there were so many fields, commodities, especially in the creative areas, the electronic areas that they were not taxed. And basically Nigeria is trying to compensate for all that. That's why it's fixating more on VAT and freeing a lot of other tax areas, reducing them.
What do you
Mm.
mean by cons of the new tax act?
The cons, like the
Advantages?
no
No, it's not advanced. Cons.
disadvantages, like disadvantages, higher VAT, raising cost of living,
Okay.
yeah, documentation burden, complexity, for crypto workers and remote workers, because before crypto and remote workers were not taxed, but now they're being taxed. Then for the progressive, I mentioned this before, higher income earners are feeling, basically in a sense, they're feeling cheated by the new tax act
It's so
because
worldwide, so that one is just people saying what they say. It's so in the UK, it's so everywhere. Mhm.
Donald Trump, yeah, so mitigate.
No, UK, if you are earning £100,000, I mean, when I was on €100,000, first the first 12,000 euro tax free. The next band, 20%. The next band, 35%. Over 70 or 55%. Government takes it back.
Wait, Jesus. Wait. Okay, you said 50. Is it 70% they take at that point, or 55%?
Oh, yeah, I think is it between 40 and 55. It's so worldwide. Once your
Oh, okay.
salary as it's going higher, so you
Yeah.
will see sometimes people not doctors don't want to do overtime because the overtime will shoot up your salary, but sometimes you can 55% of that overtime, the government will take it.
Yes, yeah, exactly. And it will even, okay, true. It's just not feel what it basically.
It has its own, you can't, there's no country that can avoid that. You can, it has
Yeah.
to be graded. Go on.
So, but net benefit to from these policies is, seemingly more than the cons. So, yeah, summary and recommended next steps. Update payroll and account systems for personal income tax bans and VAT changes. Strengthen record keeping for rent receipts, expense invoices, and crypto logs. Run tax impact models for severance, pensions. We discussed the how severance and pensions are. There's still a side in pensions I've gone and look into. Then and share treatment. Then assess cross-border workers and external profits exposure. Engage tax advisors and the NRS, the Nigerian Revenue Service, which was formerly Federal Inland Revenue Service, for guidance and rulings. So right now, um, okay, I mentioned them training executives and people to be able to comply with these laws. And basically you have staff that are trained to meet with the new expectations. Okay. Communicate changes to stakeholders and train finance teams. Okay. Thank you for listening.
Okay, congratulations. So there are plenty of opportunities. I think in Lagos now, there are so every nook and corner, over 100,000 people nationwide they are running to attend classes on the new tax law. They want to cash out in 2026. Some people run in, do one crash, 2 day this thing, you go and teach companies and they pay you. So all companies are upgrading their accountants, sending them on trainings.
Mm,
So IT, there's a lot of opportunity in IT because a lot of the way payment payrolls, staff payrolls are written are going to be rewritten. You have to write the programs again to take cognizance of all the staggered taxes now. So there's a lot of opportunity. I know sometimes social media doesn't tell people the opportunities that are available in the Nigerian economy. Okay, which one are you projecting there? Okay, oh no, it's just
Oh no, I just wanted to read this because it had
okay,
one of these had information on that pension something, and I was here before.
okay.
Okay,
Okay,
how
so
do
you
I?
are done, Abi?
I'll stop sharing screen now.
Okay. You can stop sharing so that